So good day everyone and welcome to Forex Street and Admiral Markets Corporation webinar. Today is 22nd of June 2016. My name is Nenad and we will see a lot of information concerning Bremain or Brexit. It will be seen very soon. So we need to be ready to actually either trade it or analyze it. So there will be some consequence to the result. But definitely this is a huge event, not just for UK, but also for the rest of Europe. And I will give you my own opinion, of course, but be ready to actually hear a lot of things that maybe you haven't heard before. So let's start with our presentation. Read disclaimer, explain that online education materials are available at Admiral Markets Estonia for a global audience. So to get a corresponding information on charting conditions and any other detail, you should visit Admiral Markets Global, select your country of residence, and contact an appropriate entity. Risk disclosure statement stating all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with me. And today's agenda will be economics, GBP currency, law, migration. Please use hashtag #AMBrexit FAQ for all questions, comments. We will respond. And the second part will be general outlook, Bremain versus Brexit scenario, currency analysis, and equities analysis. Okay, so there will be also some material for traders who actually want to trade the event or trade it after the event. Let's start first with mainly with economics. So as you already know, or you may not know, UK is mainly services economy. Okay, so 78% of their GDP is services, and this is GDP by sector: agriculture 0.6%, construction 6.4%, production 14%. Services by 2014 estimated 78.4%. UK exports 503 billion, okay, dollars. So UK exports heavily, and this is actually main export partners to UK: Germany, United States, Netherlands, Switzerland, France, Ireland, and Belgium. Okay, so main exporters are definitely one of main trading partners, as you can see, is Germany. So guys, have in mind and rest assured that DAX index will be heavily impacted by movement and results of UK referendum. So it's not just about GBP, it's also about other equities, about other pairs, and of course about their partners, mainly Germany. Okay, so all this is what economics is made of: manufactured goods, chemicals, food, beverages, tobacco, automotive vehicles and components, finance, entertainment, and so on. As you already know, UK is the financial hub of Europe, and definitely they want to stay recognized as financial hub. Okay, now the thing is that well, let's just take a quick look at this. As you can see, official trade statistics show that definitely European Union is the main destination for about half of all British goods exports. Okay, so that means that like in between 60 and 80% of Britain's good exports are linked to European Union membership. Now, if we see a Brexit scenario, okay, this will be actually the best and worst case of Brexit. As you probably see, and you're seeing, the thing is that we could, well, let me be a bit of neutral. So the main pre-poll results show that actually it's like 44-44 according to Financial Times. My own opinion is that Bremain scenario is being priced in. So I'm not saying that UK will remain in European Union. But what we could see from market's movement is actually that Bremain scenario is being priced in. You can see that equities are going up. Okay, Bitcoin, that is very important, guys. I'm not sure how many of you know about Bitcoin. Bitcoin is a defensive asset. Okay, it appreciates when during risk off. I will explain that. But let's say that equities are going up. Okay, all yen pairs are going up. GBP went up. So it means that market has started to appreciate a little bit of this UK remain or Bremain scenario. Now, of course, we might see also Brexit. We don't know what will happen, guys, because there are a lot of people who are undecided. But we have two possible Brexit scenarios. We have Brexit worst case and Brexit best case. So if we see a Brexit, okay, if we see a Brexit, we have two possible scenarios by 2030, and the source is Open Europe and Sura Consulting. So Brexit worst case says that UK GDP by 2030 will be minus 2.2, but you see the scale is going up towards 1.55. So the immediate scenario is telling us that it won't be good for UK, but midterm scenario, next 10-15 years, favors Brexit. Okay, so that is what I think. Also, my own opinion is that immediate impact will not be good for UK, but maybe midterm impact can turn out to be good, because there are a lot of reasons for UK to exit European Union, and also there are a lot of reasons for UK to stay. But in my opinion, well, guys, we need to be honest, there are also reasons for them to exit European Union. It's not that bright. It's not a Disneyland, you know. The European Union is not a Disneyland. We all know what we need to do, what we need to abide, and especially for UK, guys, there will be some repercussions if they stay. So they definitely need to renegotiate the terms of staying in European Union. So European Union is good entity, in my opinion, and I personally prefer European Union. But guys, as I said, be clear, it's not a Disneyland. It's not that everything is good and everything is so bright. Okay, so for economies, guys, okay, they definitely need to renegotiate a free trade agreement with European Union. Okay, now it is highly probable that a favorable trade agreement would be reached even after Brexit. Okay, because guys, there are both sides in place. So UK and European Union, and there are also advantages for both sides in continuing a close commercial agreement. Okay, as I already said, 63% of Britain's good exports are linked to European Union membership. But guys, we are not still clear with this. UK will need to adopt Euro by year of 2020 and adopt certain legislation. Okay, so guys, you know, well, the thing is, European Union is a huge entity, and all members of European Union who still didn't adopt Euro as their main currency would need to do that by the year 2020. Okay, also legislation should be complete in accordance to European Union, and UK has its own legislation. Okay, so what we could learn is that if UK is remain in European Union, they must adopt Euro and possibly drop the GBP. There are no clear consensus on that, because some people and some politicians were speculating that actually UK is allowed to even if they stay in European Union, they're allowed to remain on GBP. But it's not official. It's not that clear, because we still see that GBP should be dropped in favor of euro by year of 2020. On the flip side, if we see Brexit, UK will definitely keep GBP. That is for sure. There is no speculation and legislation, but will run the risk of losing population, guys, because there are a lot of people with European passports currently residing in UK. So what can happen is, in turn, UK asset prices may drop, and there is the risk that London may no longer be the financial hub of Europe. Now, we could see, guys, a funding deficit, because UK would lose access to ECB project funds, okay? But it's not that certain, guys, okay? It's not that certain. UK assets prices may drop. That is, well, I think that is for certain for initial impact. Additional costs for exporters also, and definitely foreign investments will be dependable on trade agreements. So that is why I'm saying it is highly probable that they should reach a favorable trade agreement, guys, okay? So let me tell you, guys, the benefits of being in European Union are smaller than they were a few decades ago, okay? Definitely smaller. And if we saw a Brexit like, if we'd seen a Brexit like 10 years ago, it would have been a far bigger deal. So the effects of Brexit will vary across sectors, various sectors that I have mentioned it, okay? Okay, this is also very important. Additional costs for exporters, okay? Because, guys, if they comply with European Union's rules of origin, okay, it's different if they were outside the single market, okay? In addition, there are fears that exporters would be left high and dry the day after the Brexit, okay? But let me tell you, guys, it's not like that, because under the Lisbon Treaty, a country that leaves the European Union has 2 years in which to negotiate a withdrawal agreement. So it will, a lot of analysts are saying that there will be some additional cost, okay, for exporters. It may be, but don't forget that because of Lisbon Treaty, a country which leaves European Union has still 2 years to negotiate a withdrawal agreement. So, well, this is also uncertain, and UK will have the time to for some preparations, okay? Now, as I say, foreign investments will be dependable on trade agreements, okay? But still, guys, if it happens, UK could use newfound freedom to negotiate its own trading arrangements to good effects. Why I said funding deficit is uncertain? Because, guys, I doubt there will be a funding deficit. Currently, UK pays far more than what they get back. It's like 55 million per day, of which only a third is returned to UK. And that also has conditions attached telling UK where they need to spend it. Additionally, UK has a big trade surplus with European Union, and they sell far more than they actually buy. So it's not Britain that will lose from a Brexit. It's, I think, European Union as a whole. Well, if Brexit, they will be clear to trade with the rest of the world on their own terms. Think about it also, guys. Now, as far as migration is concerned, guys, annual net migration from the European Union rose to, let's say, approximately 100,000 people per year. and it followed the accession of countries in Eastern Europe to the Union from 2004. Okay, it doubled since 2012, and definitely, guys, we need to say, is it a problem? Now, ask yourself, is it a problem, guys? The thing is, it's not that huge of a problem, and I don't think that it is a problem, because most migrants from European Union came to the United Kingdom to work, and they boosted the workforce by around 0.5% in 2015. So the workforce has been boosted up annually by 0.5%, and that is very supportive for the economy because it keeps interest rates low. Now, the problem with migration, definitely European Union citizens might suffer some impact, because if they do not qualify for British residency or visa requirements, then a valid European passport will not be enough to live in the UK should there be a Brexit. Okay? Also, guys, there are many European citizens, as I said, living and working in UK. 3/4 of European Union citizens that currently work in UK would not meet current visa requirements. For non-European Union overseas workers, if Britain left the bloc. So there is a lot of people potentially leaving UK. Okay, it would make very difficult for businesses to find workers to replace them. Think about it. Okay, now net migration from European Union will have impact, and that impact will be fall, I think. So if Britain was outside the single market in the medium term, net migration from EU countries would fall, reducing the growth rate of the British labor force. That will lead to upward pressure on both wages and inflation. That will be a benefit to some workers, but not to the detriment of some employers. And they will need new migration policy. Okay, new migration policy. As for the law, we see that UK has been preparing a Brexit budget, and that is approximately 30 billion GBP worth of cuts and tax raises. Okay, so economic shock of a Brexit could force UK to raise taxes by 15 billion, including 2% on the basic rate, 3% on the higher rate, and 5% rise in inheritance tax rates on the middle classes. Also, new laws that will be proposed will surely include a new finance bill to abolish the 5% rate on VAT on household energy bills. Okay? And definitely, that is okay. UK will hold on their laws. They will adopt some new laws if Brexit, but definitely one thing is for sure. European Union treaties will no longer form part of UK law. They will delete it probably and develop their own, completely their own laws, own legislation that will not have a bristle upside to tell them what to do and what not to do. Okay, so there will be definitely repercussions for law department. Okay, now for what banks actually said is that HSBC Bank prefer Remain scenario, and they are implying that 1.60 will be reached by year end, and if no Brexit, they imply that GBP will immediately spike to 1.55. What banks say are actually, I need to agree with it, okay, because also the analysis what I did say. It says it too. I will show it during the second part of the webinar. So initial reaction of Euro GBP will be higher. Midterm it should drop, and 1.3650 could be tested on Brexit. Don't forget that 1.35 is historical low, and we can see that after the year of 1999. I'm not talking about historical lows like year of 83 or 85. Okay, so last 20 years, this is historical low, and we will see head and shoulders on a monthly chart, guys. That is also very, very, very interesting to see. Okay, I will show you. Okay, immediately. Okay, so monthly chart, okay, shows really interesting stuff here on a GBP currency. So okay, this is GBP and this is actually monthly. You see, this is huge head and shoulders, guys. Okay, this is huge head and shoulders. Everything has been written on the chart. So if we see a Brexit, be prepared for possibly new lows. And definitely 3650 will be tested. That is what I think. Okay, 3060 will be tested. And don't forget that actually, if this breaks, this will be a break of important support along with 36 level here. And we will see new levels on a GBP. It will be very, very interesting to see the development. As for immediate impact, I already said, guys, look at this retail gap. It hasn't been closed yet. So this reversal implies that UK Bremain scenario is currently being priced in. So if we see a UK remaining in European Union, there will be as I say, 1.50 should be reached, and possibly, as HSBC said, 1.55 could be reached immediately. But guys, have in mind that upside, it has its potential. Downside has more potential than upside. Okay, don't be confused with bullish scenarios, please. Because upside has its own limits. Downside will wait outside if it happens. It will outweigh the upside. Okay. Now, let's get on to general outlook. As I said, these are current polls. This is FT Financial Times poll of all polls. It takes all polls into consideration, and we see that 44-44 is the result. Now, for YouGov, it's 44-42 for leave. For Orb, it's 53-47. For Servation, 45-42. My own analysis says 53-47 for Remain scenario. So I think that we could see something similar to this. But of course, guys, we don't know what undecided will vote for. So we could also see a Brexit. So because we need to have our own opinion, right? We need to have an opinion. We cannot say it could be that, it could be it. Everyone knows it. My own opinion goes slightly towards Remain. So 53-47 or 52-48 towards Remain. But it remains to be seen, of course. So in the case of Bremain, upside will be restricted. Downside should outweigh upside. And guys, this is what I was wanting to tell you. Watch for possible longs on Bitcoin, guys. Okay? If we see a Brexit, Bitcoin should jump heavily. What is a Bitcoin? Bitcoin is a virtual currency. But because there is no central bank to devaluate it, okay, it is a defensive asset. And how I analyze it, it seems to increase its value during risk off because it's a defensive asset. So this is for you guys, one advice, okay? watch for possible longs on Bitcoin in case of Brexit. Okay? Because guys, as I say, Bitcoin is a virtual currency. Okay? It's not cash. It's not cash. It's not equity, commodity. It's a currency. Okay? But special currency, because there is no central bank to govern the policy of the currency. There are no interventions. Only what I could see from the analysis is that it acts as a defensive asset. Additionally, guys, DEX will have a huge impact under Brexit scenario. Under a Brexit scenario, we must realize that we will see impact on DEX because it could mean one of the top 4 trading partners is at risk, and that is UK. Okay, that is UK. What I see is a quick drop to 98.00, and it will be an immediate drop. Further key levels in play are 96.15, 95, 94, and it might drop 2 to 3% per day, 200 to 300 points as a form of continuation. It will expose 87.00, and if it happens, guys, sell the rips. We say sell the rips. So this is a DEX daily chart. So what I can say is immediate drop towards this level here. Okay, immediate drop and further continued by these levels. After Brexit, traders should be focused on selling the dips. Okay, after Brexit. So selling the dips, selling the rallies, selling the rips. So like this. So once we see a Brexit, sell the rips. Okay, towards these levels, guys. It will be important. Additionally, guys, we can clearly see here that DEX has been kept under L3 daily. So it means that this is the range that should be tested on Bremain or Brexit. Lower range should be tested after Brexit. And if we see a Brexit towards this level, upper range should be tested on Bremain scenario. So if you want to trade it, you need to make pending orders. Pending orders for breaking these lows here towards these levels, and pending orders for breaking these levels here towards these levels. Because there is also a Bremain scenario. If we see a Bremain, UK as a trading partner would remain status quo. 10,600 to 680 should be reached. 10,942 is the next target. It will take probably a couple of days of risk on to reach these targets. So the scenario will be buy the dip, okay? Buying into dips. 10,016, 10,942 guys here. See, these are very important levels. Those are weekly Camarilla levels, and we could see spike towards these levels. If we don't see immediately DEX immediately reaching these levels, we should focus on buy the dips as a continuation. When it breaks this region, it should go up. So pending orders for long should be set here in the case of Bremain scenario, guys. Okay, and this should be reached, of course, this one over the next couple of days. Also, we need to pay attention to Ninja, or so-called Ninja, that is dollar yen. Dollar yen follows equities, guys, because all yen pairs are following equities. If we see Brexit, UK assets will drop, equities will follow. That will be followed by risk aversion. And don't forget that dollar yen fell heavily after BOJ rate decision, and Fed also lowered GDP forecast for 2016-2017. Okay, so in the case of Brexit, dollar yen should drop, guys, should drop towards 103.50, additionally 100.80 and 100.00. This will be levels to watch for if we see a Brexit scenario. Now, on the contrary, if we see Bremain, dollar yen should follow equities. Equities will be bullish because UK assets will spike. There will be a risk appetite, and dollar yen 100.350 should not be broken. Instead, it should follow these levels here. So on Bremain, I'm favoring another spike towards 107.80, ultimately 109. But we should see spike towards upside. Okay, so but please, guys, as I said, this will be one-time event, and after a couple of days, we might see a resume of the main trend. So initial spike should be higher on Bremain, and for Brexit, initial spike should be lower. As I said, guys, be careful because downside should outweigh the upside, because it will be much more heavier to deal with Brexit than to deal with Bremain, right? Here are very important levels to watch for in next couple of days should we see Bremain or Brexit. Okay, for Brexit, this is the scenario. FTSE should hit 65.00 if we see a Bremain, but if we see a Brexit 55.00, then 50 should be hit. But guys, if we see a drop below 50.00, it will be a free fall and floor will be the limit. So FTSE, okay, here, guys, as I say, if we see a Bremain, this level should be reached, 65.00. If we don't see Bremain, but rather Brexit, 55.00 should be reached here. As you can see, I have marked it here. And definitely, there will be more potential to the downside. You see, there is a X-cross confluence here, 55.00, and here you see you need to watch historical price action, because in Forex market, for historical price action always repeats. Here on strong impact on equities market, we also will see not historical price action as in Forex, but rather historical levels and zones. So this is important historical level. Watch this: 1, 2, 3, 4, 5, 6, 7 touch, recent touch 2015. So 55.00 should be tested on Brexit, and 50.00 could happen if this level breaks. If 50.00 breaks, as I said, floor will be the limit, guys. Watch for this. Okay, free fall, guys, free fall if we see a Brexit. On Bremain, my first target is 65.00, and possibly we will see this during next couple of days. As I say, a Brexit scenario will have more impact than Bremain scenario. Okay. Additionally, guys, we also need to pay attention to risk currencies such as Aussie, New Zealand CAD. Okay, you remember my analysis with Forex Street yesterday. I definitely knew that dollar CAD was going to fall. Actually, CAD was going up, dollar was going down, oil was going up, equities up, risk currencies. You could have made 50 easy pips if you shorted dollar CAD. If you shorted dollar CAD, where I told you to go short, and actually I will show you my analysis. This was my analysis I did with Forex Street. This was an exclusive analysis. See, guys, here. Okay, so okay, this was the zone to short into, and you could made a lot of pips just by selling it on rallies towards POC zones. It was clear to me, guys, especially now due to Brexit scenario. You need to connect equities, risk currencies, and Forex market. You cannot just have a system and simply say, okay, I have my system, and that will be enough for me to successfully trade. System is good. You should have a system. But if you want, and even with a sole system, I can say you are able to make money. But if you want to have additional edge, if you want to trade like professionals do, why not have other knowledge than simply watching EMAs and doing simple technical analysis? In my technical analysis, I always take fundamental factors such as equities and important events. So this is important. So these are risk currencies, guys. If Brexit, they should drop heavily. Aussie, New Zealand CAD, yen pairs. Okay, guys, yen pairs. This will drop if we see Brexit. Okay. But if we see a Bremain, these currencies should spike. Okay. So watch for Aussie yen, New Zealand yen, and CAD yen. Very important, guys. I'm not sure that you use it, but you know that I have a lot of accounts with Admiral Markets, and you probably know that actually I really use heavily this correlation matrix. This is the tool that we have with Admiral Market Supreme Edition. It's free for traders who have Admiral Market accounts, and actually it's 30 days of trial for traders who trade with demo account. But this is a necessity, because here you can enter any equity you want and any pair you want and watch the correlation. Look at this correlation, daily 200 bars. Okay, guys, this is Nikkei index, Japanese 225. This is dollar index. This is DAX. Okay, guys, watch correlation with yen pairs. Okay, with yen pairs. Look at this. Aussie yen 65 daily correlation. Dollar yen. Watch this, guys. DAX and Nikkei plus 85. Equities go together in correlation. Okay, here Nikkei with GBP dollar plus 77. Also with yen pairs plus 85, plus 73. So equities up, yen pairs up. Equities down, yen pairs down. Bremain, equities up, yen pairs down. Yen pairs up. Brexit scenario, equities down, yen pairs down. Okay, so watch the correlation. It's very important. You can also use the correlation if you want to trade intraday. Okay, if you want to trade intraday, then you just press 1 hour 200 bars and you will see correlation, guys. That is even stronger on intraday. Watch this. Nikkei Aussie yen 90 minus $98 CAD plus 78 euro yen. Guys, everything goes accordance. Everything is connected. Intermarket correlations, very important for you to have additional edge in trading. Now, as I said, what could happen to Aussie yen? Okay, Aussie yen, a very good pair to trade. I really like and love to trade Aussie yen because it follows equities perfectly. Here, guys, as I said, you watch this. Watch now. Just pay attention. Aussie yen is going up. Look at this. Swiss yen, similar pattern. You see, similar pattern. CAD yen, similar, very, very similar. And let's see the euro yen. Very similar, guys. Watch this. Let's see the dragon, guys. Let's see the dragon, pound yen. Watch this. Very similar but stronger. Now you see the correlation between equities and yen pairs. All yen pairs are going up. You can do that as a basket trade. So traders who know how to trade on basket will put all yen pairs on bullish equities and make huge profits. Vice versa for Brexit. It should go down. So all yen pairs, watch historical levels. How you do that? Open weekly or monthly chart and just do your own assessment. Very logical. Mark most important swings, guys, by placing horizontal levels of support and resistance. When you do that, you might do your own analysis where the pairs will go if we remain and where the pairs should go if we see a Brexit scenario. Okay, because it will be connected to bullish movement or bearish movement to equities. Okay, but what very important thing is that you can spot the similar pattern on yen pairs, and that is what gives you the overall conclusion. Well, the conclusion is Bremain is currently being a little bit priced in, but still we could see Brexit that will turn the markets upside down. I hope that this helped, guys. If you have any questions, be sure to ask me. And of course, don't forget that we did an excellent. Well, we received a great comments for our last blog. Chris and I did it, and actually that is Brexit vote impact on Forex and financial markets. You can read it here. I think also it was published on Forex Street, but you can also learn a few things here and there if you read the blog. Okay, so I assume that everything is clear. I don't see any questions coming in, so we can assume that all is clear. I hope, guys, that you will be ready to either trade or analyze market. As I say, be very careful about trading it real time, because I'm sure that there will be liquidity gaps, and there could be some there could be that you experience the freeze of your platforms because of the immediate impact, especially MT4 platforms, because MT4 cannot handle sudden huge spikes such as good as maybe other platforms. We could have seen that on Euro Swissy when SMB decided to drop the floor. A lot of platforms have been frozen. There were gaps, liquidity gaps. So I'm not sure that it will be the same, of course, as for Euro Swissy. It will not be the same if UK stays. Either if we see a Brexit, it will not be the same, but it will be huge, very, very huge. So it's always better if you try to make pending orders. Then after the things settle a bit, you go with either buying the dips or selling into rallies. Thank you for listening to me. I wish you to trade safe, be safe. And as always, we are here to help you. If you need anything, just ask. Cheers, guys. Trade safe.